Most countries now levy income tax, which is evaluated and paid at various rates. These rates are based on the country's tax regulations and hence are implied for people and businesses. Income tax is a type of tax that's levied on a person's or a company's net income. The tax is a source of revenue for governments and must be filed annually by the individual. However, some countries have very low or no income taxes. Yes, you got it right. These countries are either tax havens or have economies that are heavily reliant on natural resources like oil, and by that, you can already recall many countries' names like UAE and other surroundings. As a result, these oil-rich countries' revenues stabilize their economies to the point where they can avoid collecting income tax from their citizens. Majorly, the oil-rich Gulf area and the Caribbean islands are home to countries with zero income tax rates. These countries are well known around the world as preferred investment and expatriate destinations. So why not learn about countries with no tax in the world? Hey guys, welcome to another informative video on our channel. In this video today, we'll be learning about countries with zero income taxes in the world of 2022. But before we start, subscribe to our channel and hit the bell icon to never miss a video from us. Now come, let's take a look. Qatar, the gas-rich country, and according to the CIA World Facebook, Qatar is the world's richest country, with a GDP per capita of $102,800. Qatar's natural gas reserves, which are the world's third largest, provide the country with revenue. Exceptionally, the country has made significant infrastructural investments in order to liquefy and export the product. Here, the businesses that operate in the oil and gas industry are subject to a 35% tax rate, acquiring the most authority. Whereas personal income, dividends, royalties, profits, capital gains, and property are all tax-free in the country. But there are some rules and regulations that need to be followed by the permanent citizens of Qatar. As per regulation, Qatar must contribute 5% of their income to social security payments, with employers contributing 10%. Besides, until this year, there were allegations circulated around in the country that the government was considering implementing a value-added tax in order to widen its income base and lower the country's non-hydrocarbon deficit, which stood at 17% of GDP in 2011, while a 5% fee in imported goods is one of the other indirect taxes. The Cayman Islands. The Cayman Islands are a Caribbean tax and financial refuge. The Cayman Islands not only have no income tax, but they're also one of the few countries in the world without a property tax, and this is rare. The Cayman Islands are an expensive option, but if you have the funds, obtaining residency is simple and peaceful. The Cayman Islands are beautiful, but if boredom hits you anytime, flights are always there to serve you. Monaco. The country is a well-known tax haven due to its personal and commercial tax policies. Factually, it does not levy taxes on its citizens' personal earnings. After 6 months of residence in Monaco, a person becomes a resident and is free from paying income tax. Isn't that great? Additionally, capital gains and net wealth are not taxed in the city-state. Monaco residents benefit from tax-free property ownership. However, rental homes are subject to a 1% annual tax. Best of all, Monaco doesn't have a general corporate tax either. Only specific sorts of businesses that make 25% or more of their profits from operations outside the country are liable to taxation. These tax rules, together with a strong commitment to financial secrecy and data privacy, make this a very attractive destination for expatriates and foreign investors. Kuwait. Kuwait's petroleum contributes about half of its GDP, over 90% of export profits, and 80% of government income according to OPEC. Kuwait is also the country that has the world's 6th largest oil reserves. While Kuwait has no income tax, Kuwaitis must contribute 7.5% of their salary to social security benefits, with their employers contributing 11%. Well, this is one of the common regulations implied in an Islamic country. Despite being one of the world's wealthiest countries per capita, strikes and protests by public sector workers dissatisfied with their compensation prompted the government to increase wages by 25% in 2012. However, the IMF, on the other hand, warned Kuwait in May of last year that such expenditure could jeopardize the country's fiscal sustainability. Only 7% of Kuwaitis work in the private sector, and rising retirement costs might put government expenditures under strain. The country of oil has had 5 new parliaments in the last 6 years, so it's no stranger to political upheaval. Protests and corruption scandals involving prominent political personalities have stained the country, and poor parliament-government relations have impeded policymaking. Kuwait should enact a value-added tax and a comprehensive income tax system according to the IMF. Bermuda. Bermuda, a British overseas territory in the Atlantic, is a British overseas territory. The American state of North Carolina, which is around 600 miles away, is the closest mainland to Bermuda. Bermuda offers a high-end tax-free lifestyle. It boasts a pleasant temperature all year and a well-developed infrastructure including some great banks. United Arab Emirates. This Arab country is wealthy in natural resources such as oil and its free trade zones, which are open to foreign ownership and have no taxes, making it a popular investment destination. Individuals in the UAE pay no income taxes. The authorities only demand foreign banks and oil firms pay corporate taxes, while the rest of the economy is tax-free. Besides, the excise duty is applied on a small number of goods and services, whereas VAT is imposed on the bulk of commodities. Under the double taxation agreements, the UAE also allows all public and commercial firms, as well as other companies operating in the country, to avoid double taxation on abroad investments or DTA. Barbuda and Antigua. Antigua and Barbuda is a self-governing island republic sandwiched between the Caribbean and the Atlantic Ocean. There are two main islands separated by 63 kilometers. With a population of 93,000 people, it is substantially larger than Anguilla. Antigua offers a citizenship by investment program, as do other countries in the region. This could be a decent choice if you need a passport quickly and are willing to pay for it. Bahrain. Bahrain relies on money from the Abu Safa oil field, which is shared with Saudi Arabia for around 70% of its budget revenue due to the lack of a personal income tax. Citizens contribute 7% of their entire income to the government for social security benefits, whereas expats pay 1%. Employers must additionally contribute 12% of a citizen's income to social insurance, with expatriate employees paying 3%. Other indirect taxes include stamp duty on real estate transfers of up to 3% of the property's value. For renting a residence on the Persian Gulf states, expatriates must also pay a 10% municipal tax. Despite its oil wealth, Bahrain's government has increased spending on wages and other social initiatives to calm social tensions, putting strain on the country's public finances, which rely on hydrocarbons for around 88% of revenue. According to Reuters, the administration plans to cut spending by 6% in 2013 in order to reduce the deficit to just over 6% of the GDP this year. Saudi Arabia. Saudi Arabia, the world's largest oil exporter, doesn't levy a salary tax, although self-employed foreigners are subject to a 20% tax. Saudi employees contribute 9% of their earnings to social security benefits, while employers contribute around 9%. A 20% capital gains tax is one of the most significant levies. According to OPEC, petroleum is the government's primary source of revenue, accounting for around 75% of budget revenues, 45% of GDP, and 90% of export earnings. The country's huge oil wealth has attracted a large number of foreigners, with foreigners accounting for moreover a third of the population. Because they command lower salaries than locals, private enterprises have been able to profit from the expanding number of laborers from South and Southeast Asia. According to the government, around 9 out of 10 private sector employees are expatriates. As a result, the government has begun to implement policies aimed at reducing unemployment among its inhabitants. According to Reuters, private enterprises with a majority of foreign workers have been compelled to pay a tax of $640 per year for each accessed foreigner since November. Vanuatu. Vanuatu has its own program for obtaining citizenship by investment. For $200,000, a family of 4 can become citizens in Vanuatu. Also, the major advancement available here at Vanuatu is that Bitcoin can even be used to pay for citizenship. Vanuatu has a number of stunning sites too. It could be a place to call home for a portion of the year in order to take advantage of the tax-free status. Sounds promising, right? It definitely is. This was all about it. Thank you for watching the video. If you enjoyed it, please like it and subscribe to the channel for more exciting content. See you in the next video.